Right, welcome back to my YouTube channel, guys. In this video I'll be showing you guys how to choose the right order block to use in trading. Alright, so basically an order block is the last opposite candle before a push up or down. So that means before a move, buy move, the last opposite candle, which is the last buy candle before the push up, is your order block. Then for a sell, after breaking the low, the last candle, the last buy candle, which is the last bullish candle before this break, is your order block. Right, so basically we have bullish order block, bearish order block, and the bullish order block is the last bearish candle before the push up, while the bearish order block is the last bullish candle before a push down or before the sell move. All right, okay, so one of the things to consider before picking your order block, one is the location. Right, so you need to know if it is in the discount level before you buy. You don't want to buy at premium, so you want to wait for price to come back to a discount region before you buy. And using your Fibonacci from the low to the high, that's from the swing low to the swing high, you mark out using your Fibonacci, get the half. That using your Fibonacci, you get from that 50% downwards, it's your discount, and from there you can take your order block. So one of the things you need to consider is the location and also the strength of the move, which is dependent on how many times it broke structure. All right, so you can see that the market broke these three structures, and looking at the highs of those structure, breaking structure, you can see that the strength is very high and the momentum is high. And also the third thing you look at for is the approach towards this order block, because one of the things so another block is an institutional reference point where institutions are waiting to buy or sell. All right, so basically there are orders there, so they are just willing to come back to those order blocks to pick orders and push up. So the approachment, that's how the market approach the order block matters, and the faster the market approach the order block, the more valid that order block is, and the more valid that setup will be. Right, so let's go to the chart now to see what I'm talking about. Right, so basically, for example, you see this is this 10. This is the daily time frame, so you can see the structure started saying clear lower highs, lower low, lower high, lower low, lower high. Then we saw this refusal to break this low in continuation of the trend, and we saw the shift up. Right, so that momentum, and it broke this structure. So you can see the momentum of buyers from this point. We saw that it was high, and it was high. You see the buy candles were very high, and it took out this structure. So one of the first things to look out for now is location. So you want to take your order block from a location that is in premium. You want to take your order block from a discount level. So one of the things you do, you check, okay, this is my discount level, and I'm waiting I'm checking for the last second, because this is a buy move. I'm waiting for the last buy second before I will take my order. All right, so let's see. So the location, this is the region, and for our order block, we could see that this one here have not been mitigated, so you draw this and this. So those are the two valid order blocks that are there. So what you do, you wait for price to come into those regions, and you buy from there. You see how price came into this deep this down order block, and you can just place your order from here and you buy. So you can see the approach towards the order block was very fast because market wants to, take orders, and your stop loss just below the block, and you push. So for example, let me give you another example. So you see that market took out, let me take out this. The market took out this high. You can see the momentum of buyers. All right, the buying pressure is high, and you can see that if we take our Fibonacci retracement tool, you see that the 50% is below this region. So we'll be looking for last buy candles in this region. So the first one I saw was this. All right, so the second one is this deep one, and most of the time the extreme one works perfectly. All right, so you can see our price came into the order block, and from there we will be targeting previous high or any external range liquidity that you see in the market. All right, so basically let me show you a sell scenario. To validate what I'm saying. So we could see from this point that the market started from lower high, lower low, lower high, and there was a return to this order block and sold. So I just want to show you. So when the market broke out this structure to the down, let's check the location. So the location, we have this swing point to this one. So our order block should be in the premium. We want to sell at premium, and the last buy candle, which is that one, is there, and so that is our order block. And also we should check. So we check for the location. We check for strength. You can see took out this low, so making it theory lows that it took out. So there's high momentum, and we are looking at how the market came back. You can see it just took 2 days for the market to retrace back into. You can see the selling pressure, the selling momentum was higher. 1, 2, 3, 4, 5, 6. We have like 6 days, but in 2 days it came back. Approximately 3 days, it came back into the order block, and we can sell from the order block into our external range liquidity, equals old lows or other external range liquidity. I hope this helps you to know how to mark out order block that are very valid and high potential trades, and for you to take trades that are very good. All right, so go over your chart, check these things, check and test them, and please subscribe to my channel, like, share, comment. God bless you.